Traders, welcome back to another price action trading lesson. We're going to use candlesticks on a chart to help us navigate what the market is doing based on pure price action. So right now the structure in front of us is indicating a trading range. We can see consistent price swings up and down. The 21 bar EMA is flat for the most part. This means I have to identify the support, resistance at the top, uptrend played out with the break, move to a new extreme, and I can see a massive bearish spike below the EMA, confirming the trading range structure. So because I'm a price action trader, I cannot leave these candles on the chart without a pattern. So I'm going to connect the highs, copy it, put it at the bottom. We have a nice bearish leg working lower. Price action is correcting to one of the key entry points, which is the EMA. We have a new low. There is one little tick break below, so there is a first entry short, pull back, and now we have a second entry short. Now this is a second entry short at the EMA while this downtrend needs to get new extreme, and we're coming off the range highs. Problem is, this is an inside bar, and the short-term uptrend is for the most part still in play. So if EMA is gonna reject one more time and we're gonna get a low high confirmation setup of the second entry short, we can consider. And now we have a new high, little pullback higher, reversal down. This high is still lower than this, so this right here is a lower high confirmation setup. Absolutely awesome signal bar, double rejection of the EMA. This is great high probability setup. Downtrend is new low, confirmation of the second entry short. Your stop loss has to go one tick above the signal bar. Now you have a new high, first entry long pullback, second entry long failure. So now we have a failed second entry long, which normally would be also a great opportunity to even add on because the downtrend needs to get new low. Problem is, it ended rather neutral, a little bit weak close because you can see there's quite a tail at the bottom. So for this reason, it's a little bit more aggressive, but you're really supposed to be already holding this lower high and waiting for the scalp. Market keeps working lower and downtrend played out with the break and the new extreme. So perfect price action. Great setups to begin with. So let's see what's going to happen. Right now downtrend played out, so I expect some correction. We're breaking above EMA, so I'm going to draw uptrend to the upside. Okay, can I go long now because we're back below EMA. New low first entry short, second entry short failure. There's going to be break above this bar, but I cannot go long here because it actually didn't even trigger. And prices keep working lower. And prices keep working lower again. And this is concerning because since I'm a trading range, I still need to analyze the health of the trading range. I can see the EMA keeps rejecting every single time, and I have consistent series of lower highs right here. And that is not something what is supposed to happen because after breaking new low of this downtrend, you would expect some stronger push back above EMA and for prices to test the resistance. But we can see EMA keeps rejecting every single time. I have a lot of first entries working lower, so this means there's probably some bigger pattern. So if I'm going to connect these highs, look at the market geometry, copy, put at the bottom, there's a spike down, possible channel pattern. So at this point, I'm not looking to go long because after breaking new extreme, there simply shouldn't be so many pushes to new low. There has to be some bigger pattern. EMA keeps rejecting too much. So there is no long setup, there is no short setup. You know, you have another lower high here, but this lower high is simply way too big. How big is this lower high? 5 points. A little bit closer to these lows. It's confirming the first entry short, second entry short, somewhat of a double trap. You know, more aggressive trader can consider, but you need to use deep limit order. You know, a little bit too big. Market keeps working lower. We keep working lower. Okay, remember we are at the low of the day, but because EMA keeps rejecting so much, the lower highs are prevalent. I simply cannot buy the bottom. There is imbalance. I'm gonna redraw the uptrend working higher. Okay, a little bit of the overshoot. Price action is correcting. And downtrend has a break. Move to new extreme. I'm gonna zoom out. We spike down. We entered a channel. Break and massive spike to new extreme, indicating this downtrend played out with the break and a new low. We cannot look for any wider channel because this is simply too broad. Remember, we were part of a trend range. This is not a trending market. I'm going to zoom back a little bit more. You're part of a trend range. So even this channel was a little bit too broad. I was really hesitant to draw this. Before I reloaded my data, my bars actually look a little bit different. But this is already a little bit too broad for the trend range structure. But because you have so many lower highs, you cannot deny it. But now that you have a break, broad break, and massive spike to new extreme is indicating bearish depletion. And prices are strongly trading back into trend range. You have a new low first entry short, second entry short failure. Actually, there is no failure yet. There is no failure yet because there is no break above this bullish bar, so it's stalled. So if you want to go long here, which is okay because the downtrend played with the break in extreme, push above EMA. This is a reversal pattern back into trend range, but there is no trigger, so we have to cancel the order. And market keeps pushing higher. I'm going to widen the channel just a little bit because it still visually looks like a one leg working higher. There is no aspect of two legs. And notice the support is coming into play. We have a new high, first entry long, failure, second entry long. So this right here is a second entry long of two key entry points. Not only the EMA, but the important low day kilo that right now is acting as a support again. And because downtrend played with the break in extreme and the massive spike above EMA, which is indicating bullish resumption, we are part of the reversal. The failed second entry short worked. So there is right now reversal to the upside back into trend range. And this is awesome signal bar. Great second entry long. Breaking new high. So I'm going to pause looking to go long. But I can see prices keep working higher and keep working higher. You can see there has to be a bigger pattern. It makes sense for prices to go to the top of the trend range. So when I'm watching this, I'm going to draw a spike and a channel pattern, something like this, because it really aligns with the EMA. You have a new high, only first entry long here. It would be great to get a second entry long. Now, this can be considered as a hidden second entry long because you have a new high on a smaller time frame. There would be a first entry long here. This is why here we can see the bullish bar. So this is why we call it a hidden entry, because technically there is no first entry long, but it looks like it. There's a nice bullish bar in between first entry long, second entry long, but technically it is only first entry long. So, you know, more aggressive trader, but I prefer to wait for the second entry long, which never came because the trend is strong. Market keeps working higher, only a bunch of first entries. Okay, I'm gonna draw the downtrend working lower. No good setup. At this point, the trend is so clean that I decided to widen it just a little bit because the break is very, very tiny. This looks like a strong trend. It looks like the trend range is going to be completely negated. So at this point, I'm adapting to a bullish pattern. I'm abandoning the trend range structure. New high, first entry long. Can I get a second entry long? No. And notice what happened. Market keeps trending all the way down here. So this changed everything, because if I'm going to zoom back, this looks like this was just prolonged bullish pressure. The big trend range kicked in back again because this retracement was quite deep. You can see over 50%. So now that I'm observing such a massive retracement down, we have pushed so far down to right now expect new high for this uptrend. So the deep retracement combined with the trend range structure is telling us that there has to be some smaller breaks. So if I'm going to analyze it closely, it looks like there was a little bit tighter channel with the small break new high. A little bit hard to see it live, but as you can see, there is no second entry long at the EMA, and you have massive spike, sharp reversal to the downside, and such a deep retracement retracing the 50-60% of the uptrend. You have to adapt, combined with the trend range structure, break a new high, massive spike down. So I have to redraw a brand new downtrend right now. Okay, I simply have to redraw brand new downtrend. I trade the market I get, not the market I want. So there was a tiny break new high, reversal back into trend range, so the bias remains bearish. New low, first entry short, pull back, second entry short. I cannot take it. It is a horrible signal bar. Plus, it looks like there's a slightly wider channel working higher. But look at the tail at the bottom, horrible signal bar. I can't take it. We pushed above EMA, no entry here. We just dropped lower. I can't go really short here. It's above EMA. You know, double trap needs to close below EMA, and we have a break and a new extreme. So this downtrend played out with the break, new low. So I'm pausing, looking to go short. Massive spike above EMA. So I'm once again going to redraw the short-term uptrend. This is what you have to do, as you can see, when the structure is just swinging up and down. The short-term channels, they are your best bet, because once you see the break and extreme, you expect market to pivot at least short-term. New high, first entry long, pull back, second entry long. Downtrend played out, push above EMA. EMA keeps holding twice. We need to get new high for this short-term uptrend, and this is great high velocity setup, second entry long, to get the new high for this short-term uptrend. Break a new high. So I'm gonna pause, looking to go long. Now I can see EMA being flat, price is going sideways, We're above EMA, so I cannot go short, but at the same time, I cannot go long. Uptrend played out. And this is very neutral. We're going sideways. Okay, I cannot go long into these highs. Uptrend played out. This is difficult right now because there is no bias. Every single trend on my chart played out. Price is breaking lower flat EMA, so it looks like there's some small trading range. Downtrend working lower break. New extreme. One leg down. Break. Second leg down. Going to redraw the uptrend working higher. So this is difficult area. I can move a little bit higher to see the trend range, something like this. Flat EMA, consistent pricings up and down. Problem is I don't have no bigger uptrend or no bigger downtrend. So I'm forced to follow the short-term structure. And the short-term structure right now is extremely sideways without a direction. And that's always how you're going to make your most mistakes if you have bias without a direction and without a confirmed static trend range. So I cannot take any setup. Overlapping area, I'm just going to be patient. Prices keep working higher. Keep working higher. Okay, at this point I was thinking the bullish momentum is kicking in. I was thinking, okay, there seems to be like potentially a wider uptrend. But as prices reverse all the way down here, this is where I deleted it because it is just way too choppy, way too sideways. So I have to redraw a brand new downtrend working lower, following the short-term trend line rule. We're closing outside the downtrend, so the downtrend needs to get new extreme tested. New low, first entry short, pullback, second entry short. But it's a horrible bar, not full at the EMA. There is no way for me to take it. By the time I get a lower high, once again, at the EMA, massive tail at the bottom, a little bit too big. Break, new low. Now, one thing that can help us understand what is the bias, it's the fact that we're not reaching the support, and you can see how there's empty room at the bottom, and for the most part, we're breaking the resistance. So the resistance is getting a lot of confirmations, and in fact, we're breaking it, while the support has no confirmations, and we have high lows. So there is bullish imbalance present, which means after breaking new low, and we're not even testing this minor support, this massive push above EMA is now indicating, combined with the imbalance, that there is right now a brand new uptrend developed. So I'm going to copy it, put it at the other side. We have a new high, first entry long, pullback, second entry long of two key entry points, EMA and the trend line. So this right here is the second entry long. A little bit too late, so you may only want to take it hypothetically because it's quite close to market closing. Second entry long, push the new high, and now the market is about to close. So this is the overall structure for today. One part that was confusing was this uptrend because it was starting to look like the uptrend is about to break the trend range. It's going to be a strong uptrend. But once you have deep retracement and the overall big structure is a trend range, you simply have to adapt. There's a small break new high and the downtrend needs to get new extreme. Downtrend, broad break, broad push to new extreme, and that leads to a reversal back into trend range. So I'm going to wrap it up. I hope you had a good trading day, and I'm going to talk to you next time. Good luck at your trading.